Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Most investors rely on gut feelings, shiny brochures, or hype. And that's exactly how people miss red flags and lose money. At Break of Day Capital, we do things differently. We help investors make smarter decisions before the deal ever hits your inbox. From our educational webinars to our Invest Smart book to real tools like our portfolio tracker, we're here to give you the edge most investors don't even know they need. If you've been valuing our podcast and want to take the next step, subscribe to our newsletter. You'll get early access to webinars, new investor tools, and market insights sent straight to your inbox. Break of Day Capital, because smart investing starts before the deal.
Financial advisor Bromley Palamountain of Northwestern Mutual empowers people to make their financial dreams a reality through purpose, clarity, and design. Be sure to check out his links in the show notes. Today on the podcast, we have my friend Ian Tudor. Ian is a partner at JIK Holdings, which helps transform land into attainable communities. Previously, Ian was a partner in acquiring $30 million in mobile home parks. Welcome to the show, Ian. Can you start by telling the listeners a little bit more about yourself and what you do?
Hey, Gary, appreciate you having me on. I'm excited to be here. Yeah, so I guess my day is kind of focused on a few things. As you mentioned, I spent 6-7 years building a mobile home park portfolio in the Southeast, and then I sold my interest to my partners in 2022. Since then, I've kind of focused my time more on land development. I've had a strong interest to be a land developer for quite some time. And so I've been doing land entitlement, kind of flipping paper lots to national home builders, closing a couple of those deals. And now I'm kind of shifting more of my focus into the ground up world. So doing some small lot subdivision stuff in LA County and some other projects that I'm looking at as well.
Nice. Well, let's start kind of like in the beginning in your journey. I know you started off as a financial analyst. Like how did that, train you or kind of get you to, where you are today? Maybe some of the pros and cons of starting that way.
Yeah. So I initially started off in corporate finance, and I guess I met a middle manager who saw the world a little bit differently, did some alternative investing, had a house in Hawaii and Miami and a couple other things. He just lived differently than the people that I was surrounded. And so he kind of introduced me to the world of real estate. I bought my first house at 23 in a rough neighborhood with a friend. And then I realized I wanted to spend a little bit more time and get more formalized training. That led me to the job at the financial analyst with an institutional more thinking in terms of how they approach real estate. And that was a really great resource because, buying a house or two has obviously some understanding of real estate on the most basic level, but they really threw me into the deep end. I was able to work on, $100 million plus transactions and was able to lead some acquisitions and dispositions there that just made me think totally differently about how the real estate world thinks, how they model things, how they think through decisions. And that was super helpful. I work with a really talented team and very smart people on a daily basis, which helped me strengthen my, I'd say, financial analysis to a much greater extent than if I didn't have that experience.
Yeah, it sounds like a great training ground to learn with other people's money and to be around really smart people. So what drew you to mobile home parks? Your next step in your real estate journey?
Yeah, it's a good question. I was looking at like flipping houses and having my own kind of like side business when I moved to this new institutional shop. I was working for a public REIT at the time, and I was looking at options to kind of create, income and investment by myself, because I knew I couldn't just focus strictly on the salary to get me to where I wanted to go. And then the guy I worked with actually in that department mentioned mobile home parks to me while we were working together, and we investigated together. It seemed like a really interesting opportunity. And that kind of formed as we continued to work on it. And there was a break in the business where the company I was working for basically merged with another business, and they were going to be taken private. And it was just going to change the whole dynamics of why I went to work there and like the thesis and the deal flow and stuff. So I decided to jump off full time into mobile home parks, and moved back to my hometown, with a childhood friend, and my boss actually became our biggest capital partner in that business.
Nice. And so over time, you bought 30 million, which is quite a lot of mobile home parks. Talk about that and what ultimately led to you really getting out of the whole business.
Yeah, mobile home parks in 2016 was one where it was still quite fragmented. I think there's a lot of headlines today that it still is. People really compare it to self-storage, maybe 15 years after the fact, or in apartments as well, maybe in the late 90s, early 2000s. And mobile home parks had very similar dynamics. The difference of mobile home parks, which was what I found most fascinating versus other business models, is that you really had a very low turn when people actually owned their homes and there was lot rent. And so that dynamic was very different than other forms of real estate. And essentially what we did was we found smaller assets because there was still institutions in the space that could outcompete us because we only had limited capital. So we were buying, between 20 and 60 lot parks across the Southeast. And that allowed us to kind of like assemble a decent amount of deals. And then we also, I say the really big learning opportunity for us was I was doing a lot of cold calling, basically off market lead generation. And we landed this whale of a park and we couldn't close it ourselves. It was like a $10 million deal. It was 26, had zero financial partners or anything to really do that. And so we just went to another operator who was like, hey, can you close this? But we want to be a part of the operating business. And so we basically lived at the park for a year to learn the business. So I was sleeping in a blow up mattress on a double wide for a year, spent there a week. And then my business partner was there for a week and we alternated that for about 13 months. But that was basically drinking by a fire hose. And that experience in operations puts us, basically in the war zone to like understand how to like turn around a park very quickly. So that was, I think it was a 500 unit park, but it was, I think it was like 270 occupied. And so we dealt with everything under the sun within a very short period of time. And then we used that experience basically to build our mobile home park portfolio amongst myself and my previous manager.
So you guys were basically the acting managers on that property?
Yeah. So essentially the way we did it was we got a finder's fee for kind of finding the opportunity. But then we also, instead of them hiring someone or working with the existing managers, they paid us like a salary to, turn the park around. And so we were working, super long hours and just basically soaking up all the lessons we were in eviction court and dealing with all the things that come with mobile home parks in a turnaround situation that gave us, dealing with the county and with permits for moving mobile homes and managing rehab crews and, sewer issues and pipelines. And then we brought in 30 RVs. And so we were able to really get all hands on deck. And that experience was extremely valuable for us because then we could go off and really utilize those skill sets off their backing without us having, the recourse note in our name.
What an experience.
Yeah.
I mean, 6 months, for a year, but for switching off, every week with your other partner and living in a mobile home park. And what part of the country was this? Where was this?
So this was in Clayton County in Georgia. So it was South Clayton County. So a little bit south of it. I would say like 30, 45 minutes south of Atlanta.
Wow. That's crazy. And then, so eventually you really pivoted completely out of mobile home parks. And so what kind of led to that and got you in? And I know you said you had been thinking about land development for a while, but what, talk about that change.
Yeah, that was partly just due our partnership was changing. So my capital partner, I introduced him to someone else in Florida. And so they created a whole nother portfolio in Florida, kind of using a lot of the strategies that we developed over several years, and was able to find some success in Florida. And given Florida had a lot more mobile home parks, they were able to scale relatively quickly. And so I think once my capital partner realized that that was an option, he saw an opportunity to kind of like merge the portfolios together, raise retail capital or through his friends and family, and then kind of like make it a much larger transaction, which is more obviously interested to banks, and get much better debt on it because he had quite a bit of recourse over his head. So it just was a transaction that did that. But through that partnership shift, it was just a totally different change in terms of the economics of the opportunity. And we just had a lot more GPs that for me, it just felt like the opportunity for what we were trying to do and how much capital was in the space by 2022 chasing mobile home parks, that I felt the growth story was still there in mobile home parks, but it was a nice time for me to just kind of readjust into something different, given just my particular situation. I know people still are doing well in mobile home parks and there's still opportunity there, but I would say that it's not nearly as attractive as it was in 2016.
Yeah, I wish I was really kind of hitting my peak in 2016 as well.
Yeah.
But so land development, and this is an area that, I mean, I've done some spec homes, but really I don't have much experience there. And so talk about that. Talk about like what it all entails, and how the length and all of that for someone that's really a newbie out there.
Yeah, land development is quite a different game than value add mobile home parks. I'd say the big difference between the two is just the timelines in terms of it takes to get things done. So the biggest differences, or my biggest learning lessons from land development in regards to mobile home parks, is at least you have some cash flow along the way, even though you're going through a value add. In land development, just a quick maybe primer for how that business model works. Essentially, we go to owners, say, who have zoning for, they have one home per 4 acres in which the current zoning's in place. We go to them and say, hey, we'll give you a higher price than, the land's currently worth, but you have to give us time to go get the correct zoning for us to provide the value to you. And so those projects usually take between 2 and 3 years, because you have to go through the entire rezoning process, which is usually planning commission approval. Then you have to get city council approval. Then you usually have to go through a preliminary plat process, get that approval. Then you have to go through the construction docs approval. So it's quite a few checks and lots of engineers and third parties. And once you do that, you have a pretty nice shovel-ready piece of dirt that you can then sell to a national home builder. So we actually never close on the dirt, or ideally you never want to close on the dirt. And then you use their money to close and you just take the spread. And so that can work out very well if the timing's right. But in a market like today, when builders are a little bit more skittish, it's a totally different business model. So you definitely have your challenges depending on the macro environment.
And like you said, the cash flow. I mean, you still have. I'm certainly not buying the land, but you still have, all the processes of going through the entitlements. So yeah,
correct. Yeah, I would say most deals. So we usually do 100 units and up, just because that's where the most liquid capital is, which is the national home builders. They usually like in the suburban areas. This doesn't apply to everywhere, but they usually like 100 units and more. And so that is where we usually try to get entitlements for. And so we usually have to dish out at least well over 6 figures to kind of at least get our process started. And then once we bring in them, they might spend another $500,000 before you get all approvals needed.
And how many projects would you be working on at a time? Because obviously it's a slow process. So
yeah, so I guess 2022, end of 2021 is when I guess I really started to market for it. In 2022, we got our first one, but we've closed 2 in the last, I guess, 3.5 years. We have another one that we're working on right now. And then we've had a few that we've had to back out of. So it's been a pretty slow business over the last few. Luckily, the payouts are decent, but you do not get the tax treatment you get in the value add world, or there's no refinancings to buffer that tax out.
Well, let's get to the next step, because we were at dinner together, I think a week and a half ago, and you mentioned this project in Altadena. And for those that don't know, um, there was a big fire, obviously, in Los Angeles last January. Palisades and Altadena specifically, I think it was like over 4,000 single family homes got burnt to the ground and 77 multifamily buildings. And you had mentioned that you're developing an affordable 4-unit complex in Altadena where they desperately need it. So talk about the idea behind it and what you're doing there.
Yeah, so after working kind of in the entitlement world, I wanted to move. I have a deeper desire to like actually change the built-in environment in my vision versus maybe, what a track builder wants to do. They obviously serve a purpose within the market, but I have a pretty strong aesthetic in terms of what I'd like to bring into the world in terms of beauty and urbanism and stuff like that I care about. So for me, it was kind of just moving down the risk, the risk kind of like I'm realizing, okay, I've done some entitlements. I understand the risks there. Like obviously ground up construction has a different sort of risk, but to answer your question, what I've seen is, the fires have obviously had a pretty big impact on LA County as well as the city, and a lot of people had a lot of hardships there. But the hard part is, I think over the next several years, we're going to see most people aren't going to move back, and so that's pretty typical of fires or hurricanes or any natural disasters. People may have a lot of equity in their home, but when that gets wiped out and they're underinsured, they might not have the know-how, the capital, or the time to kind of go through that reconstruction process. So that usually that land will then kind of go to the next set of owners. And so what I noticed, at least within Altadena, was the majority of the people leaving can't afford to live there now because essentially they're selling their land for the price that the houses were in 2018. And so there's the land prices have gone up quite a bit after COVID. And, new homes being built there, I think will be selling between, 1.5 and 1.7, when that was a working class neighborhood, a couple decades ago. So when I saw that, I said, there's obviously an opportunity here with some of these state and Senate bills coming out to spur housing production. Maybe there's a way to sell to the people who are trying to buy a house under $1 million. Which is crazy to say, to people that's considered affordable housing in LA or right. California. It's just the way that the numbers work, given the, all the things that we have to work through. But essentially, I purchase a lot. I'm in the subdivision process now, and it'll be a small lot subdivision, which LA has had in the past. And essentially, it's just a way to allow home ownership for people. It's not subsidized by the government. So it's a way for people to get into homes and have their own home, fee simple, and without, with them being able to stay in their neighborhood without having to move to the Inland Empire or another state because they can't afford to live here anymore. So I think it's a win for both, given the circumstances. Obviously the best circumstances not to happen, but with that said, I think this will be a great option, and these homes will sell quite well, given the economics that are taking place in the area right now.
Yeah, absolutely. And for, obviously for those that don't live in California, Inland Empire, I mean, if you're commuting from there to LA, which a lot of people have to do, I mean, it could be 2 hours commute, and so we need a strong workforce in LA. And so if they have to commute really, really far, that really, really hurts us. So having affordable housing close by is incredibly necessary. Like we talk about like square footage, bedrooms. What ideally is this going to look like per unit?
Yeah, so these units will be 3 bedrooms, 2 baths, about a little over like 1,250 square feet. So a pretty efficient floor plan. And my target for this is likely people who either have been priced out of the market, who owned a lot, and you know, working with, I can just say, my first experience of working with the county, it can be extremely challenging to understand where to go and how to go and work through that. And so if someone doesn't have the wherewithal to do that, I think this could be a great option for them. And then the lot is probably, about 1,500 square foot lot. So it's a pretty tight lot, but these are going to be 2-story units.
Nice. And is the city or state doing anything to help the building get done, or not necessarily?
I, I just got my first round of comments back, so I can't. I'll know more in a few months. I'll say I think the interpretation of state bills can be misconstrued by local officials. So we'll see where they end up on that, but I think it's a little too early to determine.
Right, right. Yeah, I mean, obviously that's the problem, and it's been a problem for many years, where the lack of the ability to get building done without the ridiculous red tape and all the craziness that goes on here in our area.
Yeah, I think the one thing I will say I'm learning from I've talked to other smaller developers in the area. Like you can have all the legislation in the world, but if you have people in local government who don't want it to happen, it doesn't matter what the state law says, they can make your life difficult. And so picking site selection in terms of picking the right places to do work, like I know a lot of people leaving LA City now, just because there's buildings that have been sitting for 12 plus months that haven't had any electricity, and they're waiting for C of O, and they can't get any electricity, and eating 12 months of interest payments on a construction loan can essentially make that developer lose money, which is kind of scary.
Yeah. When I was doing some spec homes here in Manhattan Beach, and you would think like the building department would be pretty on top of it. We went from 6 months to 13 months during COVID, and they would use a third party company to approve our plans, and it would still take 2 months for them to sign off. And we're like, well, we already know it was approved by your third party. And they're like, yeah, we'll get to it. And I'm like, that was like $15,000 of interest just right there, because they couldn't actually look at the documents, and they didn't even have to, because that's why they're paying a third party administrator, which was ridiculous. It went from 6 months to 13 months. And that really drove me crazy.
Yeah, the lack of control, I'd say this probably the hardest challenge in development versus value add. I mean, obviously you have to be reliant on other people within value add stuff, your contractors, the county or municipality if you need certain permits. But a lot of the stuff you can move relatively quickly or like resolve in a pretty fast order. So like we could turn a park in a year, we'd be pretty close to stabilized. So our thing would be like we could buy almost a vacant park if it had homes on it, and this isn't even bringing homes in, but a 30-40 lot park, like we could move pretty quick. It's like within 12 to 18 months you're basically refinanced out with all your capital out, and it's like you're moving on to the next one. And so that in development, your dirt may look the exact same in 18 months and nothing's happened. You're just waiting for a certain approval. So that can be frustrating. And to your point, the lack of cash flow makes it a little bit more dangerous of a game to play. So you have to right size your risk. Otherwise you can get yourself into some financial trouble.
Yeah. 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 I've invested in a development deal with not the right person, and lost my shirt on that one. Yeah, it's you're filling a tremendous need in LA. So kudos to you. Looking forward to kind of seeing the whole process and whatnot. So very exciting. Thanks so much for coming on the show, Ian, and sharing your experience on development and your journey. Where can listeners find out more about you and what you're doing?
Absolutely. I appreciate the time. Enjoyed the conversation. I spend more of my time, at least with my business thoughts, real estate thoughts, what I think of real estate opportunity, I think we're in a golden age of small developers, honestly, with all the changes happening. So I post a lot of that with also some of the things I'm working on on LinkedIn. So that I find that to be the most receptive audience to the housing policy and the projects I'm working on.
Sounds good. We'll put that in the show notes. Thank you so much again, Ian. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.